WPLN,
Nashville Public Radio,
and 91.7 WHRS Cookeville.
Nashville's home for Morning Edition and NPR News.
WPLN.org is where you can find more from WPLN News, including the Nash Villager, your human-powered newsletter and podcast, exploring Nashville news and history. Subscribe to both at WPLN.org.
From Nashville Public Radio, I'm Blake Farmer, and this is Nashville. In a single year, Tennesseans took out more than 1 million payday loans. And often those loans were to pay off other loans, something some states strictly prohibit. But Tennessee's been especially friendly to the payday lending industry, which essentially got its start here. Today we look at how payday lending became a political force in Tennessee and the new ways borrowers are being trapped in a cycle of debt. It's an investigation by the Tennessee Lookout and ProPublica after the news. This is Nashville.
Sharing news and stories from the voices of Middle Tennessee. That's This is Nashville. Our show is made possible by Music City Prep Clinic. This is Nashville is in service to you. So if you have an idea for the show or feedback you'd like us to hear, leave us a voice message at 615-751-2500.
Live from NPR News in Washington, I'm Lakshmi Singh. 2 weeks before a possible government shutdown, House Republicans are unveiling legislation to fund the government through November 21st and add security resources for government officials. It's unclear they have the votes to pass it. The stopgap bill extends current funding levels for federal agencies for 7 weeks and adds $58 million to boost security for the federal judiciary and for executive branch officials following a request from the White House. Republican leaders in the House added another $30 million to increase resources that lawmakers can use for their own security. House Speaker Mike Johnson told reporters today the bill allows more time to come to agreement on year-long spending bills. Democrats have pressed Republicans for bipartisan talks on a short-term bill and are demanding that any spending extension should address health care subsidies that are due to expire at the end of the year. Some Democrats are also demanding that a bill roll back the changes to the Medicaid program that were part of the GOP tax bill that was signed into law in July. The man suspected of fatally shooting conservative activist Charlie Kirk will be formally charged today at a court hearing in Utah. NPR's Tovia Smith says 22-year-old Tyler Robinson is expected to face multiple counts, including aggravated murder, which carries a potential death sentence under state law.
Authorities say they have, quote, mountains of evidence, including DNA at the scene of the shooting, and they say Robinson wrote a note ahead of the attack sharing his intention, as FBI Director Kash Patel told Fox News.
He claimed that he had an opportunity to take out Charlie Kirk, and he was going to do it because of his hatred for what Charlie stood for.
Patel did not say who may have received that note or whether they may have tried to intervene. Robinson will make his first appearance in court virtually from his jail cell, where he's been held without bail. Tovia Smith, NPR News, St. George, Utah.
At an anti-hate summit in Pittsburgh today, Pennsylvania's Democratic Governor Josh Shapiro urged elected officials to condemn all violence, regardless of party affiliation.
In America, that this work doesn't just fall to others. It falls to each and every one of us.
The governor was the target of political violence earlier this year when his residence was set on fire while his family was home. The Federal Reserve's policymakers are meeting for the next 2 days. Investors are watching to see if the Fed reduces interest rates by as much as President Trump wants. The central bank will announce its decision tomorrow afternoon. From Washington, this is NPR News. The federal appeals court is blocking the administration from firing Fed Governor Lisa Cook. NPR's Scott Horsley has more on that.
The appeals court voted 2-1 to block President Trump's effort to fire Lisa Cook, at least temporarily. Cook and her attorneys argue that her ouster would be a violation of the Federal Reserve Act, which is designed to insulate the central bank from political meddling by the White House. Trump tried to fire Cook over an unproven allegation from a Trump ally that she made false statements on a mortgage application. Cook has denied any wrongdoing. For months now, the president's been lobbying the Fed to make deep cuts in interest rates. The central bank is expected to order its first rate cut of the year on Wednesday. White House economist Stephen Myron will participate in that vote. Myron was confirmed to a seat on the Fed board by a closely divided Senate Monday night. Scott Horsley, NPR News, Washington.
For years, Mississippi has had one of the highest rates of vaccination in the country, but now that rate is slipping. NPR's Katie Riddle explains.
The vaccination rates in Mississippi are still relatively high, but thousands of families have filed for religious exemptions. Pediatrician Anita Henderson says this is an issue she deals with nearly every day.
And I can say as a general pediatrician, I am now getting more and more and more moms who are questioning vaccines, refusing vaccines, and we really have become a victim of our own success.
Henderson says she fears parents will have to start seeing the impact of preventable diseases before they agree to vaccinate their children. Katie Riddle, NPR News, Mississippi.
It's NPR News.
Support for NPR comes from NPR stations. Other contributors include Fisher Investments. As a fiduciary, Fisher Investments is obligated to act in their client's best interest. Learn more at FisherInvestments.com. Investing in securities involves the risk of loss. This is NPR.
Funding for This Is Nashville comes from you, our listeners. And One Community, presented by the Tennessee Titans Foundation, creating generational change one person, one family, one community at a time, by impacting lives in between Sundays. Learn more at TennesseeTitans.com/community.
I'm Blake Farmer, and this is Nashville. We're talking about money today, finances, and where Tennesseans turn when money gets tight. According to the Center for Responsible Lending, more than 1 million Tennesseans took out payday loans over the course of a year. These are numbers from 2022. Nothing unusual about borrowing money. We all do it, but it's usually highly regulated, mostly to protect us, the borrower. In the late 1960s, the feds passed the Truth in Lending Act to require the fine print on credit card applications be standardized, easier to understand. Following the 2008 mortgage and financial crisis, the Consumer Financial Protection Bureau was created to protect consumers from deceptive and abusive practices, a lot of times around mortgages. Payday lending, on the other hand, is largely left to state regulations. And there are 20 states that basically ban the practice, including neighboring North Carolina and Georgia. The rest of the states have varying levels of protections for borrowers, and we'll be talking primarily about the effectiveness of those protections today in Tennessee. Much of this conversation goes back to legislation that was passed in 2014 by the Tennessee legislature. It was bipartisan and broadly supported. It was promoted as legislation that was protecting consumers, but reporting from the Tennessee Lookout and ProPublica has revealed a much different story, one that surprises even some of those lawmakers who voted in favor of creating something called a flex loan, which is something we'll get into. Later in the hour, two of the state representatives to vote against that legislation join us, a Republican and Democrat. We'll also get some financial literacy help from the folks at the Nashville Financial Empowerment Center and United Way. Also a reminder, we're streaming on YouTube. If you'd like to get a video experience today, it's youtube.com/@WPLN. We're right here in the studio if you'd like to get a visual experience. We're not taking calls today. However, you're welcome to comment on that video stream, and we will get some of those comments on the air as you leave them there at youtube.com/@WPLN. We'd love to hear about your experience with payday lending in Tennessee. And when you comment, we'd love for you to leave your first name if you would. Otherwise, I'm sort of stuck trying to make sense of your YouTube handle. But if that's all we get, I'll make the best of it. So we start with reporter Adam Friedman of the Tennessee Lookout. So much of his investigative reporting is what this episode is based on. Welcome back to This Is Nashville.
Glad to be back on.
Yeah, well, eventually I want to kind of go back a few decades and talk about how the payday lending industry sort of got its start here in Tennessee. But for now, let's just go back one decade. What was this legislation that led to the creation of the flex loan?
So the flex loan is an extremely high interest loan. It carries, and I'm going to do a little bit of math here on the air and we'll see if people can follow it. So it is a 24% interest rate with a 0.7% daily customary fee. So if you take 0.7, multiply it by 365, add it to the 24, it's a 279.5% interest rate loan. That's what the legislature created in 2014. Along with that, they removed a bunch of consumer protections that existed in other versions of high interest lending, and they made it basically more predatory for people to take out loans.
Yeah, which of course is not how it was pitched in those legislative hearings. I actually went back and Mary Mancini, who produced this episode, went back and found, one of the few committee hearings where it was discussed in any detail. It was very clear that the bill that created this flex zone was written by the payday lenders themselves. This is not that unusual in the state legislature, but they called up the lobbyists to explain to them what was in the bill. Here's Cullen Ernest from 2014 talking about why they're asking to be able to charge so much in interest for these lines of credit, much higher than what someone would pay like at a bank or a credit union.
This certainly wouldn't be the type of loan that someone that could qualify for a loan with a better rate would run out to get. This is the majority of times these people, this is the credit of last resort for them, and that is the reason why we may be able to charge more for this type of product than others can, because we deal with a riskier portion of the population.
That's Cullen Ernest, who handles government affairs for Advance Financial. We did invite him to be on the show today, but he declined. Sent a few points that we'll get to throughout the show today. But Adam, did lawmakers know what they were voting on in 2014?
I think
really?
That's a good question that you can ask the two men in your next segment, because they might have a different answer than I have. I don't necessarily know. I think if you're reading the bill, so go online, read it. Nowhere does it say 279.5%, right? The bill doesn't say this is exactly how much it costs per year to take out this kind of money. It says it if you do the math I did earlier, but I don't know. I assume somebody kind of knew, because you have to pass the bill. And when they got to a final floor vote, you could tell they were figuring out the math on the floor. Representative Stewart, who you're going to have next, basically asked that question and made them pause to figure it out. So I think there's kind of a toss-up on whether they knew exactly what they were doing. I mean, the other part of this loan, right? I think there's a discussion about whether payday loans should be allowed or not allowed. People need access to emergency cash. It's going to happen. But should you be able to charge the rates you charge? Should you be able to kind of have the other things this loan created, which was the ability to sue, to add these lawyer fees, right? To turn a $3,000 loan into a $10,000 lawsuit, right? That wasn't really allowed before. And that's where this gets really kind of murky in this whole thing. It's not necessarily like whether this should be allowed or not allowed, but can you create a version of this that is has more consumer protections and can help people, because people are going to need emergency cash in this world.
Well, let's talk about this in terms of some of the folks that you interviewed. You interviewed, I think, more than a dozen borrowers for your stories on Advance Financial. One is a 36-year-old from Nashville named David Hill, and he starts by borrowing $175 from Advance, and that was in February of 2020. And it sounds like he would pay it off and then borrow the principal the next day.
Yeah, that's the way these loans are designed. They're designed to be able to be paid off at any point. That was kind of one of the selling points, right? Is like a traditional payday loan, you do it every 2 weeks. It's like a flat fee. And so that had some benefits or not benefits. Being able to pay it off whenever means if you, let's say, I know tomorrow I'm going to get $300, but I need $300 today to fix my car. This loan might be a good deal for you because you can pay off the loan tomorrow. You'll pay the 0.7% plus the interest. So it's a minimal fee, but it's not the end of the world. But the issue becomes these loans extend out for time and keep going. And the flex loan, particularly because of the way you can borrow and reborrow and borrow again and put more on and extend your credit, all of a sudden, you can turn into borrowing $175, can turn into borrowing $20,000, and you could have paid the company $22,000, and then you can't make the payment, and then you get sued for $6,000. Yeah, and that's where it kind of spirals.
Well, and it sounds like David Hill, he reborrowed something like 80 times over a year and a half, which, like you say, you could do because you could pay it off in just a couple of days if you wanted to make sure you weren't charged too much interest. And you point out that Advance kept increasing his limit and basically encouraging him to borrow more, which doesn't sound so different from the offers people get from their credit card companies and such. But why does it start to head into what some people consider like predatory lending?
I think the big thing here is the interest rate is 10 times higher than most credit cards. I think credit cards you might see 40% interest rate, but most are between 20 and 40. This is 279%. The other part of it is the people have to borrow these loans are not in the completely destitute, but working people who are basically probably getting by, but something happens and then they can't get by. Medical, car breaks down, they need to escape a bad relationship. Those are kind of the three things I've noticed a lot of and so they borrow the money one time to try to get out of this situation that they're just desperate, basically, right? In, the better states that have this type of lending require a more specific breakdown of like, if I borrow $500, you can make 6 payments over 6 months and it's paid off, and here's the exact payments. With this constantly borrowing and reborrowing, it creates this system where you're kind of just like, you kind of lose track of like how much you paid, what you've taken out. It creates this really confusing system that Advance knows what they're doing. I mean, they're a company that tracks all this, but as the borrower, you kind of lose track of, I borrowed $200 for this, and then something else happens, and they're kind of just waiting, hoping that, if you're living kind of paycheck to paycheck, emergencies happen a lot. So maybe the first emergency you pay off the loan right away, but then the line is still open. Well, then something happens again, and then maybe this time you can't pay it back because it's a medical expense and you can't go to work the next week, and it kind of just spirals out of control.
If you're just tuning in, I'm Blake Farmer. This is Nashville. We're talking about payday lending in Tennessee and some great investigative reporting from the Tennessee Lookout in partnership with ProPublica. And frankly, we're sort of learning, maybe we shouldn't be calling it the payday lending industry anymore. It's really the flex loan industry. Is this unusual that Tennessee actually codified something called the flex loan into law?
Yeah, I only found one other state that actually has created the law for this. There's a lot of like weird lending things where you can get around some of these like laws in general. Some of these states, like Georgia, even while they might ban payday lending, there's a way to get title loans to work there. There's a lot of like kind of gray area to this. But Tennessee was one of the first states to codify the flex loan. A couple other states, Arizona, Texas, had what you would call copycat laws. Very similar, a little bit different interest rate, but still the customary fee format. They didn't pass those laws. We're one of the few states to really just allow this and kind of just let it keep going. A lot of these states that like, there was a way, like Advance tried to expand into Virginia, doing a similar type loan. Well, the state cracked down on it, saying, well, it violates our current laws of interest rates. So like other states have taken steps to kind of try to stop this type of lending. Tennessee kind of just let it go.
Well, you're saying Texas and Arizona looked at passing something like this and voted it down.
Yeah, it was one of those bills that gets kind of proposed and died in committee. It wasn't like a massive, like every lawmaker's against this. But a lot of, like in Arizona in particular, the case there, the clergy, the church really came out against the high interest rates. They really thought this was kind of usury, and that kind of helped kill the bill there. And it was almost an identical law. I mean, it was a slightly different customary fee, but it was very worded the same way as Tennessee's law.
Well, talk to me about the political influence of the payday lending industry in Tennessee. I mean, I know that, a lot of people will trace the origins of the industry back to Tennessee. Is that why there's so much influence?
I think that's part of it. I mean, I think, so you go back, the original payday loan laws in the late 90s, it's kind of come out of Cleveland, Tennessee. A guy named Alan Jones is kind of the originator of the payday loan from a company called Check Into Cash. They now have sold and are part of some conglomerate of payday lenders. I think a lot of it is that this legislative majority, a lot of the money raised is payday lending money. I mean, it's not, there's lots of other industries, don't get me wrong, but it is one of, when we compile all the campaign finance data, right, and Advance ranks in the top 10 for money given. And
that's just one of the companies.
Yeah, and it's just one, and that's they're up there spending similar amounts of money to something like the Tennessee Hospital Association or like a little bit less than AT&T, and these are companies that we think of, or that we think of kind of like blue bloods of the state, right? Bell South is AT&T. There are so many hospitals in this state.
Did I see that they spend more than HCA? The largest, Blue Cross Blue Shield.
I think the latest they were number 6 or 7 on our list. I mean, they are just up there for spending, and it's because they're almost entirely reliant on state lawmakers to stay in business. Tomorrow, lawmakers could cap interest rates or get rid of customary fees, and the business dies.
Wow. Well, let's go back to David Hill. You found that since this law allowed for flex loans, where you can kind of roll them over like David did, Advance Financial has sued more than 100,000 Tennesseans to make them pay up. First of all, what does that process look like when a payday lender sues a borrower?
I think we got to start at the beginning here. So, I'll just give a broad example, David. So, let's say you borrow $2,000 and you make a minimum payment, which is required to be 3% of the loan plus all the interest and fees. And you make that payment for 6 or 7 months. So you probably at this point paid the company $3,000. So they've made a small profit, right? Well, you still probably owe $1,500. I mean, this is kind of rough math. And let's say you stop paying it. They will then let that loan grow for about 90 days, roughly doubling it. So now it's a $3,000 lawsuit. Then they add a attorney's fee. So that's another third of the loan. So now it's a $4,000 lawsuit.
Which was not allowed before the law passed 10 years ago.
Yeah, because the other loans that existed before this had very strict caps where they couldn't exponentially grow. The 90-day thing is kind of really what it seems that Advance does, but there's nothing in the law that says they couldn't wait 180 days, couldn't wait 270 days, right? They could let these loans keep growing forever. I have never really seen a lawsuit for more than about $10,000 to $12,000.
I see.
But
one could imagine that at some point it seems impossible that someone would pay it off anyway.
Yeah, I mean and then when you get to court, so let's kind of keep going that process. So you get to court, they sue you for what's at this point we're say $4,500 give or take, because you add in all the court fees. You can go to court. Most people do not show up. It's just something they don't do because they don't have time. These are people who are working, trying to just basically get by. They don't have time.
Or scared.
Exactly, another reason. So you can maybe call the lawyer ahead of time, cut a deal, say I'll pay $200 a month or whatever. You'll try to make a deal. If you don't do any of that, or you miss the $200 a month payment, what could happen is they could garnish your wages, take 25% of your paycheck, and that happens a decent amount of the time.
Right.
That's kind of like it's an easier way to collect, right? Garnishing wages. If you know where someone works, you don't have to worry about getting a check every single month from them. You can just get it right before their paycheck even reaches their bank account.
Right. And so you're saying before this law passed in 2014, there was very little of this happening because you couldn't collect that much anyway. And now that you can collect, you look, and obviously this is all public record, 110,000 lawsuits.
Yeah, I mean,
from one company.
Yeah, you can see the spike. I mean, let's be clear, Advance is not the only one suing. There are other companies suing over flex loans. Advance is just the biggest one in the state. They have over 80 stores now. I think at one point they reached 105. They've closed a few in recent years. So they're not the only one doing suing. But yeah, on a traditional payday loan, it couldn't grow exponentially, and you couldn't. So you could never be sued for more than $575. Mm-hmm. And you couldn't add an attorney's fee. And so add attorney's fee is valuable. It's usually somewhere between 15 and 30% of the judgment amount they're suing you for.
Yeah. There was more legislation on this topic that passed just this year in the legislative session that ended. It increased the rate that a company like this could charge, the annual percentage rate, I guess, to 36%. How does that dovetail with the other law that was 24%, but obviously had this little 0.7% daily fee thing?
Yeah. So the daily fee is by state law not considered interest. So by federal law it is. So if the federal government capped interest, it would count. But by state law, that fee is not interest. So the 36% is a higher percent interest cap than the 24. It's just it's a fee disguised.
Yeah. Well, is there any sign that the state legislature feels like something should be done to rein this in, or really was the passage of that law this year kind of indication they got the support of the legislature?
I don't know. I mean, I think it's kind of up for some other people maybe to say than me. I really don't know. I mean, I haven't seen any movement recently. Maybe there'll be some bills, sponsored this time of year, but you can ask our next people on. I mean, it's hard to move any kind of anything related to loans and high interest lending because they're a powerful group.
Yeah, well, fine. Well, Adam wants to get on to the next segment anyways. Teased it several times. We'll do it. No, we're going to have Adam back just at the end of the hour. We need to take a quick break. Adam Friedman of the Tennessee Lookout will be back at the end of the hour with the Financial Empowerment Center to talk through options when money's tight. But up next, we have the Mikes, Representative Mike Sparks and former State Representative Mike Stewart. Both expressed concerns about the power of payday lenders in Tennessee. So stay with us. This is Nashville.
Funding for This Is Nashville comes from you, our listeners, and Community Foundation of Middle Tennessee, working to help donors make more possible through the power of community giving. More at cfmt.org. And Wildwood Resort and Marina on Cordell Hall Lake, offering corporate and nonprofit retreats, getaways, and celebrations, 1 hour east of Nashville, year-round. More at visitwildwood.com. And Alliance Bernstein, built on a culture of knowledge and innovation to help advance the financial success of their clients. AllianceBernstein.com. Alliance Bernstein is not affiliated with National Public Radio.
In decades past, gambling addiction was a big problem in Norway, so the government there imposed strict regulations on the gambling industry.
So if it gets really bad, you will not have so severe consequences that you cannot carry on with your life.
How Norway addressed gambling addiction. That's next time on The World.
This afternoon at 2 on 90.3 WPLN News.
I'm Blake Farmer, and this is Nashville. Imagine times are tight. I mean, maybe it's not too hard to imagine for some of us at this moment. Your credit score's in the dumps. No credit cards, no family able to jump in and get you out of a pinch. And so you go to a payday lender. They're very convenient. Some are open 24 hours a day. They get you the cash you need on the spot. You agree to pay them back in a couple of weeks. And over time, the interest rate doesn't seem too unmanageable because you'll pay it off in a couple of weeks. But in 2 weeks, money's still tight. So you take out a little more money. And in 2 weeks, you pay some of it back. And then 2 weeks later, you take out even more. Pretty soon, you're maxed out. And it's all you can do to keep up with the payments. Debt is a big issue in the United States, whether it's credit cards, payday loans, flex loans. It's all over the place. I mean, in Tennessee, the average credit card balance is around $5,000. But it's payday loans that are regulated primarily at the state level, and some states see them as purely predatory, so they ban them. 20 states ban them. Arkansas has so many rules that they're effectively banned. But Tennessee's been fairly friendly to payday lenders. The industry really got its start here, as we heard in the last segment, and the companies are among the largest political donors in the state. Our guests are here to talk about some of that influence and how that plays out in the halls of the state legislature. Mike Stewart served in the Tennessee State House from 2008 to 2022. He's one of only 6 legislators to vote against the 2014 bill we've been talking about that created the flex loans. Joining us is another one of the no votes, Representative Mike Sparks, who's an active state representative representing District 49, part of Rutherford County, Smyrna. And a reminder, streaming video from the studio today. If you want to see me with the mics, it's youtube.com/@WPLN. Welcome, Mike Sparks, Mike Stewart.
Thank you.
Thank you.
All right, so maybe I'll start with Mike Stewart. The vote for this bill creating flex loans back in 2014 was bipartisan and very decisive. Very few people voted against it. Why did it pass so easily?
I think it passed so easily because it was effectively lobbied.
Yeah.
You had a lot of people lobbying for this bill, and they pushed it and did a good job kind of concealing the worst aspects of it until it got to the floor. I know you played a clip by the advanced financial lobbyist. It was very vaguely discussed in committees.
Yeah.
So that combined with the fact that it was so heavily lobbied, got everybody to the floor of the House, at least. I wasn't in the Senate, but got everybody to the floor of the House essentially in a position where there wasn't any significant debate on the floor.
Yeah. You're saying because there hadn't been big issues raised, when it was in the committee where people really do debate things.
Yeah, right. If you have a bill that everybody understands and is focused on school vouchers, okay, pretty much every legislator's thought pretty carefully about school vouchers. We know what they mean. It's hotly debated in every committee all the way up. By the time it gets to the floor, people have strong views and they know what they're going to talk about. By contrast, these financial bills can be viewed as obscure and kind of technical. I don't think a lot of people realized how bad these flex loans were. They didn't understand the interest rate, didn't understand all these, and I think I'm glad it's brought out in this program, all these additional things that make these loans particularly bad, particularly the attorney's fees, the ability of these companies to sue people.
Well, Representative Sparks, I mean, what did you understand about the legislation that maybe your colleagues didn't?
On the first one, 2014, that bill was Representative Kevin Brooks, if I'm not mistaken. Kevin Brooks called the bishop. He worked for the church, worked for Cleveland Church down there. And, I'd fought it, and so did Bill Beck, and the late Bill Beck, great guy. And when it came up, I remember someone asked me if I could just vote no and not speak on the bill. And that guy's got his own set of troubles right now. And I just said, no, man, I'm not going to roll that way. And what Kevin did, Representative Brooks did, I just, and I wish y'all would play that clip. I just said, explain to these children up here in the gallery and the parents and teachers that's up there how your legislation to raise interest rates is going to benefit the next generation. And they cut my mic off. I don't know if you might probably remember this. And I like Speaker Beth Harwell. I have a lot of respect for her, but they cut my mic off. And so he tries to play some games, and he's like, on the bill. I said, I'm on the bill. We're talking interest rates.
You're saying you're on the floor of the legislature, and there's all these sort of rules that govern how you're supposed to even talk and direct you're supposed to talk, stay on topic, and all this sort of stuff. They're kind of trying to.
He's trying to act like I'm veering off topic. I said, I'm on interest rates. We're talking interest rates, and I just asked the speaker, don't censor me because I've got 60,000 people at that time that depend on me to be a voice. So my voice was really being censored at that moment. I think I may be the only Republican that had their voice silenced that I know of. And I mean, it's kind of
you wear it as a badge of honor,
well,
you know.
I do. But you know, one thing when you look at President Trump, he's trying to lower interest rates to help the consumers, to help home buyers, help homeowners, and we're going to raise interest rates. And what really disappointed me with Kevin Brooks, he ended up becoming the mayor of the city of Cleveland, and the guy's a minister. This latest bill was Representative Powers, who I like. Representative Powers, I consider him a friend, and I called it the ugly bill. It's the ugliest bill I've ever seen. And I questioned who got a call from a constituent saying, please raise interest rates.
Yeah.
Zero. Not one person did.
In other words, we actually have a clip of sound that's in our back pocket because we were going to use it in the last segment. But you've made this very same point that like no one is exactly asking for this. But let me sort of sorry about that. But let me sort of press pause on this and sort of ask: do you see some value in having this sort of access to quick cash? I mean, there are obviously people who need it. Is there a way, in your view, that it could be, regulated in a way that is worthwhile?
I mean, look at how much money they're making off these things. I don't have a problem with someone making a profit, but here's what bankers aren't seeing. I've shared this with bankers is some of these individuals could be bankable. They could be home buyers, but when they get tied down in this, I call it the slavery of debt. It's got some serious implications in the next 5 to 10 years. People aren't seeing it. Fortunately, my town, city of Smyrna that I reside at, that I was born at, they took a position probably about 6 years ago. You can't open one of these in Smyrna. You can't open a title mag.
Is that right?
Yeah, Smyrna may be the only town that's done this. And you could look up and down the road. They're everywhere. I happened to take a tour with Melissa Harold, our court clerk in Rutherford County. Just spend a day with her on helping people like expungements and making sure that folks have access to look up their records, that sort of thing. It seems like there's some glitches there needs to be better communication. So I was sitting with her, and we walked by, and it was all this boxes of letters going out, and they were all garnishments.
Wow.
Oh, I'm talking hundreds. And I was like, whoa, maybe I'm not here for this expungement issue. Maybe I'm here for this issue.
Wow.
And the sad thing, Blake, other than you and maybe Adam, there's no one talking about this. I mean, can you name a main media source that's talking about this issue?
Well, your point is so well taken that it happens. I know several years ago I was reporting on medical debt around the country, and of course this is all tied to that. I mean, sometimes people are borrowing this money to pay off a medical bill that somebody else says, we're going to sue you if you don't pay. So, but it happens so quietly. Then you go to one of these courtrooms and you see just how many people are coming in every day. Mike Stewart, can you talk about what changes when you allow, like this 2014 bill did, that they could sue and sort of charge for attorney's fees? What does that change in terms of the stakes here?
Yeah, I mean, it changes everything. It means that you can ruin a family's life with one of these products. It used to be you had payday loans, which are a terrible product, and they were capped at $500. Essentially, made it impossible to have, or some of them were capped at $500. There were different products, but most of these products before 2014, it didn't make any sense for these companies to sue people.
Yeah,
they might not give them more business, but they really couldn't come after a family and take their cars, take their property, put them in horrible debt. Whereas now, with these flex loans in 2014, we set it up so that it's very easy for these companies now to go after people because they can get the attorney's fees paid out of the judgments. And so basically it turns all of our sessions courts across the state into bankruptcy creating machines. This was horrible legislation. You asked, is there some purpose to these products? And I would argue, I don't know, go down to Georgia. Georgia seems like their economy is doing pretty well. These loans are totally illegal in Georgia.
North Carolina, too.
Yeah.
Arkansas.
North Carolina, Arkansas. So all this is totally unnecessary. It's a huge plague put on Tennessee families. And as Mike was saying, it all happens kind of obscurely till you go down to Sessions Court one day in any county in the state, see all these people, working people who have children, who are trying to get Christmas presents, and they're being dragged down by the neck by these ridiculous products that we should have never made legal in the first place.
And a reminder, we did have, the primary person we were talking to for this episode and that Adam Friedman talked to for his stories on Advanced Financial is a guy named Colin Ernest, who was invited on the program today, declined, sent us several points that we'll raise here and there. But they were certainly offered multiple times to join us on the program. If you're just joining us, I'm Blake Farmer. This is Nashville. We're talking about payday lending, though we're kind of learning that it's almost the flex loan business these days. Representative Sparks, did the state lawmakers realize 10 years ago that they were kind of creating this sort of changing the payday lending business, that it was now going to become this flex loan, almost these lines of credit? Because my understanding is that's by far the majority of the kind of loans that are made these days.
I mean, I can't speak for other legislators what they're thinking. My background is the car business, and I had the first .com car company in Tennessee and probably sold the first car on the internet. So I've been around people. I financed a few cars. If somebody needed 90 days, I needed a year, I may give them a year on something. I didn't want to go finance, but if they needed me, I would try to help them. I would always send them to the credit union or send them to the bank. But even with cars, it's hard to get, a financing for some of these, for just the average person sometimes. But when I see this stuff, it really makes me sick. It makes me just want to throw up. And what's so sad, I blame, Blake, I'm telling you, I blame some of this on the media, because the media is look at the money they're making off the ads. I mean, how come Phil Williams doesn't ask these questions?
A lot of respect for Phil Williams.
I like Phil Williams, but I mean, Channel 5's not addressing this issue.
You're saying because they advertise, Oliver.
Yes, don't you think?
Yeah, well,
they're in on it. They're all in on this stuff.
Well, talk to me about the influence, because there are some that give more, but obviously payday lenders are big political donors in Tennessee. But what does that actually look like at the state capitol? What does that influence look like when you're there working on bills that are related to their business?
Well, I think everyone has access to your lawmaker. I mean, 741-1100, you can reach, just mention the name, and you should be able to access them via the phone. I mean, everyone is welcome in my office. I've met some folks that it was a little uncomfortable meeting with them, but we had good conversation, and I've taken on some issues that are a little unorthodox: music therapy, mental health issues, student mental health issues that really need addressing. This is a serious issue that seriously needs addressing. And I can't speak to you have the records of who accepts donations, how much money Advance donates, Title Max. But I witnessed this personally with a lady, and I produced a video myself. If you go to YouTube, type in Miss Helen, Predatory Lending, I seen a lady that was about to get her car. They were trying to repo her car. She took a loan out for 11%. And I videoed, and I was going to try to negotiate with the guy, try to get the price down, because she was just desperate. And she had a sister in the car that was in her late 60s, special needs, battling breast cancer. That sister has since passed. But if you watch the video, the guy says, "Well, you don't understand this business or something." I said, "Man, I wrote a book on the car business. I've literally wrote a book, Learn the Car Business, Find the Profit." And they're after her car. So here's what's so serious, and 99% of the people would never know this until you're talking about it, until others that have a voice for it. But he trapped her at the 11%. She's thinking it's 11% a year, 11% a month, so it's 132% interest. You see it when I zoom in on the contract. Then she was telling me a guy, this Dale, the repo man, had been texting her like, "Hey, you can't hide your car," this and that. And I told him, I said, "Man, you know what she's going through? You realize she's got to sit right here in the car, and if you'd have took her car, she'd probably wind up homeless." And think of how that goes back on our culture, how that affects society. And it's these people really, and I say these people, it's middle class folks that's being affected. Yeah. You go up there at our court clerk and you go talk to her, get a shot of that, get a video of all those letters. They had to hire somebody in her office. So now the taxpayers are picking up this dime.
Because there's so much going through the courts. Let me ask this. One of the points that comes from the folks at Advance Financial who declined to be on the show, they say the Department of Financial Institutions in Tennessee has received 91 complaints on these from flexible credit lenders. I think not just them, but since 2020, which is basically 1 in 1,000 of all new flex loan agreements. They say that the data reflects that there's satisfaction among the vast majority of customers. I wonder, why don't more people lodge complaints, Mike Stewart?
Well, I mean, they've lodged 90 complaints. What's happened? Nothing at all. And that department has been historically, in my experience, a completely toothless animal and has done nothing to restrict any of these products in any meaningful way. So first of all, that department, unlike, honestly, a lot of departments in the state of Tennessee, I was always proud. Tennessee, in a lot of ways, is an extremely well-run state. It's a low-debt state. In a lot of ways, Tennessee's various departments do a fantastic job. I would single that department out as a particular failure. It's had bad leadership for years, and it doesn't do a thing for these citizens. So I would recommend citizens don't waste their time filing those complaints, because I can assure the citizens that under the current commissioner and the current leadership, nothing will be done about it.
Well, surely at some point there's too many people to ignore.
Well, apparently not, because in the recent article it's shown that thousands and thousands of Tennesseans are getting sued. Clearly, they're not satisfied with these products. Clearly, these products are predatory to them. And again, if these people happen to live over the border in Ringgold, Georgia, none of this would be happening because these products would be illegal. So this is a total scam that has been foisted upon the people of Tennessee. It's terrible legislation, never should have been passed. You know, I'm a Democrat. Democrats are in the wilderness right now. They're trying to figure out why they no longer have a lot of political power. One way Democrats could, and Republicans too, Mike's a Republican, he voted against this, and it did not, I will say, to his credit, it did not surprise me at all when I heard that he had voted against this bill, because he was consistently that sort of person when I was up there. In any event, one thing Democrats could do is take ridiculous bills like this, ridiculous legislation, and sweep it into the dustbin. Couldn't do it in Tennessee today, but they could do it in states across the country.
Mike Sparks may give you the last word here. Is there anything that you feel like could be done on this front? Do you think there's any appetite from hearing more of these stories that state lawmakers might want to take up some sort of regulation?
Well, like Mike mentioned it, when folks are going to be, because your cousins are going to start being affected, your family members are going to start being affected.
You'll know people.
You'll see school teachers.
So you think there really is something just beneath the surface that's like, listen, there's 100,000 lawsuits out there. People are having wages garnished already. You'll see
Blake,
it.
we got to get the media. We've got to get people to start caring about these things. And when you've got, and I'll say this, when you've got two ministers, I'm a Christian. I try to walk by my faith and stand on my faith. And it's often lonely sometimes. It's lonely when you're one of the few people to vote against this bill. And I called it the ugly bill. But here's what I want to point out. Okay. Both these guys that were advocates, Kevin Brooks is a bishop, very involved with the church, supposed Christian, and put the boots on the neck of all these people. Look at Representative Johnny Shaw that took issue with my comments. Go back and watch it. Yeah. He's a minister, an African-American minister. So these folks, whether they have 100 church members or 50 church members or 1,000 church members, need to call these representatives and say, why did you vote for that bill? Explain your position. They can't explain it. If they are trying to explain it, they're blowing smoke up their tail, because this is a bad bill and it's going to have repercussions for the next generation. I went to the governor, asked him to veto this. He looked at me shocked. He said, why does this matter, Mike? I said, because the next generation are going to be strapped with this stuff. My dad was a World War II, flew in Germany with the B-17s, and he didn't believe in any debt, grew up during the Great Depression, and that's why right now I'm debt-free. And my dad, I always remember my dad, he would always say, stay out of debt. And I know we have to have debt to buy a home, that sort of thing. But these young people have to start knowing, man, this has some serious implications if you make bad choices in your life.
Well, thank you all both for being here. We need to take one more break. Mike Sparks, state representative from Smyrna. Mike Stewart, former state rep from Nashville. Thank you for joining us today. When we return, we'll talk about some alternatives to payday lending. So stay with us. This is Nashville.
Funding for This Is Nashville comes from you, our listeners, and Amazon, proud sponsor of WPLN's daily show, This Is Nashville, engaging our differences so we can discover our unity. More on Amazon's community work at aboutamazon.com. And Blue Cross Blue Shield of Tennessee, serving the young and young at heart right here in Tennessee for 80 years. Blue Cross Blue Shield of Tennessee. Learn more at bcbst.com. And Margaret W. Wong and Associates, providing a range of immigration services for companies and individuals with attorneys and staff who speak English, Spanish, Mandarin, and many more languages. Learn more at imwong.com.
So it happened. The federal funding that supported the entire public broadcasting system is gone. I'm Holly Kernan, president of Nashville Public Radio, and I'm here to say that's okay. In fact, there's even a silver lining, and it's this. We are now completely independent. The criticism that we should not get federal funding is now moot. We depend on you, our listeners, our members, our community. So join us. Let's make sure Nashville has the public radio we deserve.
I'm Blake Farmer, and this is Nashville. The trouble with money trouble is it comes along with a lot of shame and stigma. How did I get myself in this mess? A lot of times we know exactly how, and we don't necessarily want to air all that with anybody else. Our jumping off point this hour was an investigation by the Tennessee Lookout and ProPublica into something called the Flex Loan that was created by the Tennessee legislature in 2014, a law written by payday lenders themselves. The result has been more people taking out credit, more than 100,000 lawsuits by these lenders to get repaid. Reporter Adam Friedman is back with us in the studio, and we're joined by Aaron Ackery. Wow. You know, after all that, she says, listen, it's just like it looks, Ackery. Aaron Ackery from the Nashville Financial Empowerment Center at United Way. Welcome to This is Nashville.
Thank you. Nice to be here.
And we're still streaming video on YouTube if you want to join us visually. YouTube.com/@WPLN. Join us in the studio. So, Aaron, you call the Nashville Financial Empowerment Center at United Way Nashville kind of the city's best-kept secret. I assume that means it takes a while for people to find you. So why is it so easy for people to find, like a payday lender, but maybe harder to find the Financial Empowerment Center?
Great question. And we don't want to be the best kept secret, but I guess, with limited resources and limited number of counselors, we can only serve so many people. But you all probably have noticed that there's an Advanced Financial on every corner. But we are free. We provide financial counseling to anybody in Nashville, and we're a program of the mayor's office in partnership with United Way. And we want to serve as many of you as we possibly can, so please seek us out.
Yeah, and I do want to say just in each segment of the show today that Advanced Financial was invited on the show and has communicated with us, and we've peppered some of their comments throughout the hour, but they declined us on being on the show today. So the Financial Empowerment Center, you all provide one-on-one financial counseling, so credit counseling, budgeting, saving, investing. And it's free to anybody who lives or works in Davidson County. I wonder how often your clients have these flex loans as part of their problem.
Yeah, good question. I was telling Adam earlier, we don't necessarily have the quantitative data on that because several different companies provide these loans, and we do collect information in a database, but we don't have the numbers. What we do have is qualitative information. We have session notes from each session that we conduct with clients where we just kind of write about what's going on with them. And those notes are very, very clear about how difficult and pernicious these loans are in our clients' lives.
Yeah. But I imagine there was a time that loan helped them get through something.
I guess you could say that, but I think at the end of the day, when you kind of get to the end of your rope, the best option is always going to be any other option other than this loan, because people will take them out and then end up ultimately having to ask family and friends, having to scrape and beg, borrow, and steal just to get out of these loans.
Yeah. Adam, in your reporting, how often were people who were maybe trapped in one of these debt cycles that involved a flex loan like we've been talking about, how often were they also in some sort of financial counseling? I mean, did you run into that at all?
Maybe a few here or there, but many people that talked to me were people who were just stuck in this and got sued. I mean, that sort of was where we took the reporting ultimately, right? We wanted to find people who had been sued as part of it because there are so many. I mean, like I said, there are over 110,000 and so far, and that number grows every single week in Tennessee and every single county pretty much. But it's hard. I mean, it's hard to find these services. People don't know about them. There is, like you said, a ton of stigma around this. A lot of people feel some shame around ending up in these sort of debt traps that are basically designed to trap them. But it's hard when you're desperate for money, for something to get by. You don't think long term, right? You don't think about the next month or 3 months down the line. You think, how do I get the thing solved today so I can solve my problem that's happening right now?
What were the conversations like in this shame and stigma piece is what this is getting at? You got people who are, have portraits, have their full first, last name, talking about their mess that they're in. How hard was the convincing to be part of your reporting? Because obviously you're putting yourself out there.
Yeah, it's one of the hardest parts of the story, and it's what led up. I mean, we started this story in October of 2024, right? We didn't publish something until May, and part of that was we had the data pretty quickly, but it was finding people, the right story, getting people to talk on the record, give their names, take photos, because, and it was a lot of pitching them. It's like if one person talks, you can kind of break that stigma really slowly.
You're not going to be the only one in this story.
Exactly. And it just shows you're not alone, right? Once we published the story about the lawsuits, it became a little bit easier to get people to talk because they realized they weren't the only one. People go to these courts and kind of realize if you went to a court, you realize, you look around, you see a dozen people all being sued by the same company. But like once people realize, this is like a system where everyone is getting sued that takes these out. Basically, not everyone's getting sued, but a high percentage of people who take these loans are getting sued in terms of like compared to other types of loans. And it was a little bit easier to kind of break through on that.
If you're just joining us, I'm Blake Farmer. This is Nashville. We're talking about the payday lending industry, which we're starting to maybe call the flex loan industry in Tennessee. Aaron, if somebody's listening and thinking, all right, listen, pretty pertinent because I need money now, not like in weeks. How could they use like the Financial Empowerment Center, or what would you recommend as a short-term solution before they, have the sort of budget talks and the credit talks?
Well, there have been clients in our office who have these flex loans, and they actually might have qualified for a loan at a different institution. They just maybe didn't know where to look. They didn't know what types of banks or online lenders might approve them. So they went to the Easy Corner store and they got a flex loan because these loans have no underwriting. I think that's what maybe is being missed in this conversation.
Explain what that means.
Well, underwriting at a bank, they're going to take your financial situation into account. They're going to look at your debt to income ratio. They're going to actually determine if you can afford to repay this loan. Obviously, the rates at which flex loans go to court, it's clear there was no underwriting for these products, and the people are being approved for loans they could never afford in the first place.
You're saying that they're not even looking to see that the person has the means to potentially pay this back.
Not at all. There is no credit check.
Yeah, and I've talked to a lot of people, which this is who will have borrowed, I'm going to give another example, borrowed $3,000 and paid back $6,000 over a year. I would think any bank in this country would want to give someone that loan to pay that kind of interest rate, right?
Right, 100% interest.
But they're not, right? There are people who maybe didn't quite know if they would qualify or kind of on that edge, and so it was the timing of this. But and then another part of this is that never really reported to a credit agency. So you've made a lot of these on-time payments.
It's not reported to credit agency. Really, it doesn't.
Oftentimes it's not. So you don't get any credit for paying off. Because also, if you pay that $6,000 and $3,000 loan, you still haven't paid off the loan. You've maybe paid half of it, maybe a third of it over a year. I mean, it's a fraction.
Well, it's intimidating to walk into a bank, especially if you're like, do y'all work with people like me? I mean, so what's the first step?
It can be, but I think one of the mics mentioned this, that all of the customers who qualify for a flex loan, they already have a checking account. They're already banked. They're already a customer at a bank. So I think the banking industry really does have a role to play in fixing this problem. But I would also say, just to your earlier question, if someone doesn't know where to turn or how to start, then they can come see a financial counselor and get a little bit of advice. We can maybe look at their overall picture and see where we could direct them to get into a product that is maybe not so predatory.
Mm-hmm. Yeah,
I would also say, too, I think that's a great point as well, but these loans could be designed to be a little bit easier to understand to pay off at the same time.
What do you mean?
So in Ohio, they have a similar type of line of credit loan, and they require you to explicitly tell the borrower how much the loan will cost over X period of time and how many payments it takes to pay it off at what payment. So it's $500, and over 4 months, you'll owe us $800. You have to pay us $200 a month on this date. People default on those all the time, but it becomes very clear to see. The flex loan, there really is none of that. There is a line on these loans that say this is a very expensive form of credit, but there is no table to show you, well, if you only make the minimum payment, you're going to pay on a $4,000 loan $12,000 over the next 3 years or $15,000. Like there's nothing really to show you what the actual sheer cost of this is. There's an interest rate that's out there, but it's not like very easy to understand.
Yeah. Aaron, for clients of yours who are in, let's say, one of these lawsuits, a judgment, after they've essentially had a judge say, yeah, you owe this, and maybe it's even down to like garnishing their wages, is there much they can do?
Well, there's not much you can do about the judgment itself, but if you are getting a wage garnishment and it's causing you a financial hardship, you can file what's called a slow pay motion, which will allow you to pay a smaller monthly payment based on your financial circumstances. And as long as you keep up with your payments, the payment isn't going to increase.
Yeah. Well, and what about those who maybe have a summons to appear in court? Is there anything you could advise them on?
If you're able to go, please go to court. That's
Why? Because I know that's scary. Because you're like, I don't have an attorney. How does this work?
Of course, it's scary, and you know that whoever's suing you does have an attorney, so it can feel really intimidating. But if you're not there, your side of the story is never being taken into account. You're going to get the judgment against you by default, and
You're
you'll
saying
never...
because the judge will say, well, is this person here? Silence, and they'll say, well, judge, they're in default.
Exactly. The judgment will get granted by default. Mm-hmm.
How often did you find that, Adam, that these are people who, like, that for one reason or another, they didn't show?
I mean, the vast majority of cases, people don't show. I don't have an exact number.
Yeah.
It's really hard to actually track this specifically, but most of these become default judgments. I mean, showing up is the first thing. It's intimidating because there really isn't that much like documents that the companies have to give. They have to give a contract and say you owe, but oftentimes, like, I've heard of a case where someone got it thrown out because they were able to show the judge that they borrowed $3,000, paid $9,000 over a year, and that they shouldn't still owe $8,000 because the company made it. Because there are some parts of the law where they're a little more open to interpretation by some judges, right?
Yeah. And the judge can do a lot, has a lot.
So
they could do.
There are cases where if you go to the judge and you try to explain and you want to get more details, but it's very intimidating. You have to understand what you're doing. And this is the person who was able to get a lawyer because they had a family member who was a lawyer, right? So there is that benefit, right? A lot of this time, like, I've seen people who qualify for legal aid lawyers. They've sometimes had some cases thrown out. Like, it's hard. It doesn't always happen. But like showing up in the slow pay is one of the first things that you should try to fight for.
Well, quickly as we end, if more regulations are unlikely in Tennessee, how, Aaron, would you coach consumers to protect themselves?
Never walk inside of an Advance Financial. If you are having a financial difficulty, it's really important to seek every other option because there are new things coming online all the time to help consumers with small dollar loans. Some employers even have options for their employees. Maybe if you have a 401k, even that is better to borrow from. Just avoid these at all costs.
Well, Aaron Akery from the Nashville Financial Empowerment Center at United Way, thank you for your insights today. And Adam Friedman of the Tennessee Lookout, thank you for your in-depth reporting. And I know it's an ongoing project. If people have experiences they'd like to share, what's the best way to get in touch with you?
I got a cell phone number, 615-249-8509. Call, text me experience with Advance Financial, with Flex Loans, or with anything related to that company.
Well, you don't get cell phone numbers many times on the air, but we like it.
I'm not giving you mine.
Thanks for tuning in this hour. This is Nashville is a production of Nashville Public Radio. Today's episode was produced by Mary Mancini, directed by Tasha A.F. Limley. Our board operator is Liv Lombardi. The masterminds behind that theme music you hear are LaRange and Namir Blade. Special thanks to the Tennessee Lookout and ProPublica. Listen back at thisisnashville.org or wherever you get good podcasts. You can also just ask a smart speaker to play the latest episode, and the video is archived at youtube.com/@WPLN. Conversation doesn't have to end here. You can comment, tell us what you want to hear on the show by leaving us a message at 615-751-2500. We're also on the socials at This Is Nashville. This is Nashville. I'm Blake Farmer. Go in peace.
Big changes are coming to Middle Tennessee. A special election is underway to determine who represents our region in Congress. And Elon Musk's company has begun work on a tunnel running under Nashville without much input from the city.
Why shouldn't we have an input on what happens in our city?
I'm Mariana Baca-Yao, and as a WPLN reporter, I'm tackling those stories and more, shining a light on how decisions at the State House affect your everyday life.
This is 90.3 WPLN,
Nashville Public Radio,
and 91.7 WHRS, Cookeville.
Nashville's home for Morning Edition and NPR News.
WPLN.org is where you can find more from WPLN News, including the Nash Villager, your human-powered newsletter and podcast, exploring Nashville news and history. Subscribe to both at WPLN.org.